Hello, my name's Annabel and welcome to this step-by-step tutorial video on how to use our Airbnb Investment Analysis Spreadsheet. This spreadsheet has been designed to analyse Airbnb and short-term let deals made within the UK. This includes purchasing an existing Airbnb property or converting a property into an Airbnb. This spreadsheet compares finance options, for example, bridging loans, mortgages or buying with cash. This video aims to run you through every element of this spreadsheet. Finally, I will give you some examples to demonstrate how this may work for analysing different Airbnb strategies. If you've already purchased this product, feel free to open it up on your device while watching this tutorial. Equally, if you're watching to see if this product is right for you, feel free to take notes and reach out to me directly on Etsy if you have any further questions having watched this tutorial. All the links to our listings will be displayed in the bio below. Even though this video is for the UK analysis spreadsheet, this is also applicable for those using the international version, as it works in the same way. There are two main differences between the UK and the international version of this spreadsheet. Firstly, the UK version automatically calculates stamp duty land tax, a property tax applicable in England, whereas the international version leaves this cell blank, so you can add your own taxes suitable to the country you are looking to invest in. Secondly, the UK version uses the term bridging finance, whereas the international version uses short-term loan. Both are calculated the same, the only difference being that bridging finance is a popular type of short-term loan option for those investing in property. To view the full listings for the international versions, please follow the links in the bio below. When you open the spreadsheet, I highly recommend reading everything in the instructions tab first. However, as you are watching this video tutorial, I will be explaining the steps along the way. Please note that this tab contains instructions on unlocking this spreadsheet if you wish to play around with the formulas, but please do this at your own risk. If you are using the Google Sheets version, you'll notice a big instruction at the top of the tab. You need to go to File and Make a Copy in order to edit this spreadsheet. This is because this is my master copy. Therefore, I cannot allow editor access to my customers, as everyone would be using it at the same time. Remember to save your copy under the property address name and save it in a relevant folder. Let's start in the Financials tab. The Financials tab is where most of your calculations will take place. It's divided into four main steps: purchase method, upfront costs, refurbishment, and invested funds. As a general rule, fill in this tab from left to right and only edit the cells highlighted in orange. Start by selecting your currency at the top of the tab and entering the full property address for the property you are looking to purchase. Then, choose on how you plan on purchasing from the drop-down menu. You can select from cash, mortgage, or bridging finance, a type of short-term loan. If using money from an angel investor, select cash for now, and I'll show you how to fill in these details later on in step 4. Once selected, you will see the relevant cells underneath turn orange. These are the cells you need to fill in for selecting this particular purchase method. Notice how the relevant orange cells will appear as you select other options from the drop-down menu. Once you've selected an option, add the loan to value or loan to purchase, interest rate, and the number of terms you'll be borrowing for. You may be wondering why bridging finance says loan to value and the mortgage says loan to purchase. It's because bridging loans work slightly differently from mortgages. Bridging companies give you a loan based on what they believe the property is worth, as opposed to how much you paid for it. Therefore, this affects the deposit amount, as you may be expected to use more of your own cash if the loan doesn't cover this. If the bridging loan is the same as the purchase price, enter this price into the surveyor's valuation cell. Next, we look at the column to the right, purchase costs. This section automatically calculates the deposit based on the loan to value in step 1 and the stamp duty land tax. Please bear in mind that this calculation is based on the higher tax bracket for purchasing additional properties in England. The tax brackets are explained in the glossary tab if you want to find out how much you'll be charged. You also have plenty of room to add your own upfront costs, such as auction fees, bridging finance fees, planning and architect costs, HMO licence, sourcing fees, or any other legal fees. The total purchase costs will be displayed at the bottom. Next, let's look at the refurbishment section. This is partially divided into two sections. The first half looks at your total refurbishment costs, i.e., what's your total budget? Based on this budget, you can set a contingency of your choice, as well as a percentage for a project manager if you desire one. There are also a few spaces to add your own costs. My suggestions include warranty, landscaping, drawdown surveys, as well as costs for furnishings, photography and staging. You may decide to lump this cost together and put this figure into the refurbishment cell at the top. If you want to obtain a more accurate refurbishment figure, I suggest breaking down your costs further. If you need a template to help you with this, check out our property refurbishment spreadsheet on our Etsy shop. It helps to break up the work needed based on the different areas of your property. There is room to add quotes and estimated costs, as well as an interactive Gantt chart and several graphs and charts to help break down your budget. To view the full listing for this product, check out the link in the bio of this video. Once you have determined your refurbishment figure, you need to enter in the estimated length of the refurbishment. In other words, how many months will it take for the refurb to be complete? If you don't plan on refurbishing the property, please enter the number 1 into the cell. Under the total bills during refurbishment section, add the estimated bills for the entirety of the refurb period. There is room to add costs for council tax, water, electricity and gas, as well as 4 extra spaces. Other example bills could include ground rent and service charges. Depending on your purchase method in step 1 and how long the refurb will take, the spreadsheet will then calculate how much you will be expected to pay in terms of the total mortgage or bridging finance payments. If you have selected cash as the purchase method, this cell will be blank. Remember, these are the total bills during the entire refurb, not just the bill for 1 month. Lastly, you'll move on to step 4, invested funds. This short section breaks down how much money you'll be borrowing, for example, in terms of a mortgage or bridging finance loan, and how much of your own capital you'll be expected to have to purchase and refurb the property. If you do not have enough cash to purchase and refurb the property up front, you may want to consider finding an angel investor for financial assistance. An angel investor is typically a high net worth individual who provides financial backing for entrepreneurs and other projects. If you find someone who can provide the cash you need for the project, you can enter the loan amount into this box, as well as the interest rate they will receive per year on their capital and how long you'll be borrowing their money for in months. Once you have filled in steps 1 to 4, you will see a breakdown of the invested funds in the pie chart below. Now that we've entered all the details into the Financials tab, we can now head over to the Airbnb Analysis tab. This tab is divided into 3 main steps: rates, charges and costs, refinancing, and monthly rental expenses. As a general rule, fill in this tab from left to right and only edit the cells highlighted in orange. Start by reviewing the financial summary on the far left. The information provided here has been taken from the Financials tab. This enables you to view all the key information under one tab. If you want to edit the data, please go back to the Financials tab and amend accordingly. Under step 5, add the base rate you are expected to charge per night alongside an additional guest rate. To work out the possible base rate you could achieve, head over to Airbnb or Booking.com to find comparable rentals that are similar to your property in terms of condition, size and location. Make sure your comparables are the most recent and within a quarter mile of the property to obtain the truest value. Then enter all the information you find into the Research tab. The Research tab will gather all your data and return an average asking base rate figure at the bottom. Feel free to use the average base rate figure in step 5 and adjust based on the size and condition of your potential property. Once you've got your rates, continue to fill out the information regarding the minimum and maximum number of guests per night, the average number of guests per stay, and the minimum number of night stays you want to set. These figures will be dependent on how you want to manage the property, the number of beds and rooms the property has, as well as the average nightly rate within your research. Under additional costs charged to guests, enter as many additional fees customers may be charged with. Examples provided include pet fees, late check-in fees, and a cleaning fee. However, there is space to add your own. Then, add a service fee as a percentage of the booking total. Airbnb typically charges 14% of the booking total to customers. However, please note this may vary in future. Once you've completed the charges, scroll to the right to view the setup costs. These are the additional costs you need to pay to turn your property into an Airbnb. Examples include costs for furniture, painting and decorating, paintings, a deep clean, and electrical goods. If you want, you may decide to price these factors into your refurbishment costs in the Financials tab. If so, feel free to leave this section blank. Similarly, there is plenty of additional space to add your own expenses. Lastly, enter how much you predict the Airbnb will cost you per stay. This could include cleaning and laundry per changeover, as well as other service fees you may be charged for. Service fees and card fees can be entered as a percentage of the booking total. As an example, Airbnb typically charges 3% of the booking total to be paid to them per stay. But again, please note this may vary in future. Similarly, feel free to enter your own costs in the spaces underneath. Next, continue scrolling to the right to view the refinancing section. Please note this section is optional and may not apply to all Airbnb properties. If you do not plan on refinancing the property, leave this section blank and move on to rental expenses. If you plan on refinancing, in other words, remortgaging, go ahead and select the type of mortgage you want. If you are unsure, please speak with a mortgage broker who will be able to advise you. Then, fill in the details, including the refinance valuation, the loan to value, the interest rate, and the length of the term in months. The spreadsheet will then calculate the new mortgage amount and tell you how much is left in the deal based on paying back any other loans you may have taken out. For example, bridging finance loan, mortgage, or an angel investor loan. If there is money left in the deal, the cell will turn red and display a negative figure. If by remortgaging you pull your money out and more, the cell will turn yellow, indicating a positive figure and cash surplus. After refinancing, head over to the rental expenses section. This is where you can add all the monthly expenses you'll be expected to pay whilst letting out this property. This includes your electricity, insurance, water, cleaner, mortgage, broadband, and any of your own costs you may need to pay, for example, ground rent and service charges. You can also set a percentage for a booking agency fee if you decide to use a third-party booking service. Once you've entered all this information, the spreadsheet will return the numbers under the anticipated monthly returns graphs on the far right. These graphs will give you a visual breakdown of the revenue, gross profit, and net profit against the occupancy of 30 days, i.e., typically 1 month. The graph on the left provides numbers for the base rate, whereas the other compares the numbers for the additional guest rate. Depending on how fully booked the property is let for, you'll be able to compare different net profit numbers. Net profit is your expected take-home capital after expenses and taxes, including any mortgage or bridging finance payments. Feel free to go back and adjust the numbers within the tab to see how much you could achieve if your rates or expenses increased or decreased. Now that we've looked through the Airbnb Analysis tab, let's quickly walk you through the Research tab. As touched upon earlier, the Research tab can be used to hold comparable data about your property, including sold price comparables and rental comparables. This tab will mainly be used to compare prices, which can subsequently be used as the GDV in the refinancing section and for establishing base and additional guest rates in the Airbnb Analysis tab. However, there is also room to add other useful information, such as the distance away from your property in miles, the total size of the property in square meters, minimum night stays, the number of beds and bathrooms it has, as well as its condition and the URL link to the property advert if applicable. Even though these cells are optional, you may find this tab useful to deepen your research. Now I've talked you through how to fill in this spreadsheet, I'm going to show you a couple of example fictional deals. In this first example, we'll be analysing the figures of a property already running as an Airbnb. We are hoping to secure the property at $465,000 using a mortgage. As the property is already running and is in good condition, we don't need to spend any money on refurbishing. However, we decide some of the furniture could be updated. Therefore, £150 is put towards setup costs. Looking at similar properties in the area, we believe we might be able to increase the base rate on this property. You decide you only want the property to be available to book approximately 50% of the month, as you like to travel a lot and want to be in the area when guests are staying at your property. With this in mind, you'll likely achieve an occupancy rate of 30 to 40% per month, having found some comparable data at the time of this year. With this new figure and the relevant charges added, we could be looking to achieve a net profit of approximately £1,200 based on a 40% occupancy rate. As this doesn't quite fit with your property target income, you consider using a third-party booking service to manage the property, so you can let out the Airbnb for the full month whilst being away. With a more realistic occupancy rate of 60 to 70%, you could now achieve a net profit of up to £3,400. My second example is based on converting a property into an Airbnb. For this deal, we plan on using bridging finance and the help of an angel investor. At a purchase price of $130,000 and $68,000 in refurbishment costs, we need approximately $112,000 of our own capital for this deal. With the help of an angel investor, they can loan us $50,000 to secure the deal. Looking at our comparable data, it's likely we'll be able to achieve £110 per night at the base rate, plus £25 at the additional guest rate. As this is a flip project, we decide to refinance the property once the refurbishment has been completed. Once we've added our costs for furnishing, decorating and monthly rental expenses, we believe we could achieve £1,800 in net profit in month 1 at an occupancy rate of 60%. As you've just witnessed, you can see how you can use this spreadsheet to analyse in depth the purchase of an Airbnb deal. The great thing is you only need to add the numbers once. If you decide to change the purchase method, for example, simply select another option from the drop-down menu and add the information to the relevant highlighted cells. You do not need to delete anything. That way you can easily see which purchase method works best for you. Remember, this spreadsheet is to be used as a tool to help you make better investment decisions when it comes to buying property. These figures are to be used as a guide for your property deal, as there are many other factors at play when deciding whether a deal is worth pursuing. For example, the location, the owner, the types of tenants and the history of the property. As always, please liaise with a mortgage broker to help you decide which finance option would be best for you. The more times you use this tool, the more familiar you'll become with the terminology used and how the process works. If you have any questions about how to use this spreadsheet that I have missed in this video, please get in touch and let me know. Thank you for watching this video. I hope you found this tutorial helpful. Until next time.